After the holiday weekend, let's take a look at the June 2024 jobs report. Is the Fed ready to save Bidenomics? Hello, this is Chart GPT today. Yes, we just had the 4th of July holiday there in America, and we see whether or not this recent jobs report in June is going to fit the bill to help Biden in his re-election. Whether he stays in or stays not, that seems to be the political game right now. But in the meantime, let's take a look at this BLS report. They added 2006, 190 was expected, pretty much in line. Down a little bit, and I would say that the trend, it was starting to bump up a little bit. We thought we'd get some improvement, but no, we're back down to this downward trend in jobs. So the Fed is successfully slowing down the economy. It has helped inflation. However, we still get that commodity super cycle coming that we spoke about before. But in general, the jobs is heading down, giving impetus for the Fed to potentially lower rates. That's what everybody's talking about here. And of course, the other big thing on the report was the revisions, big downward revisions. So that plays into it as well. A couple other things here. We can see here that the unemployment rate's ticking higher. I got to 4.1 up from 4, highest print since November 2021. So you can definitely see the trend is up. It's not, skyrocketing, so it's not falling off a cliff, but nevertheless, it's going up, and the Fed is going to probably take a look at that. Going into the election, which is only 4 months away, we'll have to decide whether or not the Fed is enough to make the Fed act. We'll talk about that in a minute here. In the meantime, some of the other kind of negatives in the report, we've talked about many other things, but half of the jobs increase in the last 12 months has been from a birth-death adjustment rate in their numbers. So it's probably a little bit worse than what it even looks even in the charts. Of course, here you can see the ones we've been looking at for quite a long time is the establishment versus the household survey. One is the job employer, one is the job seeker, and you can see that the divergence is there. So basically, there's been very little job growth over the last, let's say, 12 months. So this is what the Fed is looking at. So let's get into it. We used the 2-year Treasury to see which way it's going. It's working that wedge. Now, normally you would think this wedge would break higher, and it's coming back down to the trend line here. And so my take is that the Fed, even though they say they're not political, I think they're not going to move during this 4 months before the election. Some people are talking about 2-3 rate cuts. They may happen, but I think they would probably happen after the election and maybe into early 2025. We'll see, unless we get some kind of breakdown. So my take is they won't do anything to not appear politically. And there's no real reason. I mean, if employment was really falling off a cliff, they'd probably act, but I think they're going to stay pat at least through the next 4 months to the election. That's my take. And of course, you can put that into all the different other subsequent trades below that. Now, the only thing that would make me change my mind is maybe a black swan event that, like a war breaking out or another pandemic where the government comes in and prints a lot of money, and that would cause perhaps the interest rates to kick up. But I think the likely direction will be down, especially after the election. So that's my take on the credit. Now, what does that mean for stocks? I think the stocks are screaming to extreme highs. We look at, there's a kind of a correlation between balance sheet, global central balance sheets versus the S&P, and there's a huge divergence there. Something's going to give. So either the banks are going to start printing money like crazy, or the S&P is going to have to come down. It doesn't mean it's going to crash down. Everybody's looking for that 20 to 30% dip to buy in, which would probably be a good play, most likely. Will it happen? We'll see. But the problem is everybody's waiting for the dip to buy the dip, and then the dip don't happen. So it's going to take an event here, a catalyst event over the next 4 months, and of course prior to the election, that could be very possible. In any case, take a look at the AI write-up about historically what changing Fed interest rates before elections. Kind of interesting, gives you a little bit of history breakdown in the post link in the description box. And answer our online poll. What is the likelihood the Fed will change rates ahead of the 2024 presidential election? In the meantime, don't forget to subscribe.